Episode of Canadian Mortgage Weekly this week, September 14th. And today I'm talking about exactly how co-signing and adding a co-signer can really make a huge impact on your mortgage application. There's going to be a few different ways this works out really well for anyone applying for a mortgage. And I'll be sure to cover all these different ways in which co-signing and co-signers really add a lot of power and financial strength to your mortgage application. So much so that you'll see how much more you can actually afford with a co-signer. And with a co-signer, you can actually get into that home you really, really want. Forget about looking for a home on your own anymore. If you're thinking that you want to buy a home and you want to get it in your name alone, just forget about that idea right now and start looking for a co-signer. If you're having a hard time qualifying for a home right now, just forget about it. Look for a co-signer. And there's a few different ways that people can do this. There are a few different ways that I've seen people do it as well. And with that, I hope that my experience that I'm going to share can help folks that are looking to get into the market today use that to their advantage. So first thing, why would you want a co-signer and what is a co-signer? And I'll talk about that as I chat about some of these benefits that people can get when they add a co-signer to their application, because otherwise, forget about it. You're not qualifying for a home on your own. Last week on our podcast, Canadian Mortgage Weekly, we went over how much exactly someone that is making a really good income on their own, an income of $80,000 could afford. And I believe we were looking at somewhere around $300,000. So that is nothing in today's market. So what we need to do is look at expanding that. If you're a single person, I always recommend getting two co-signers. If you are a partnership or two friends or husband, wife or boyfriend, girlfriend, and you're already making those two incomes, then you're probably only going to need to add one more co-signer and only have one total co-signer. But let's take a look at this example I have on the screen here. And if you're joining me on TikTok or Instagram specifically, I don't have those numbers on the screen, but I do have them if you want to look and join me on LinkedIn, Facebook, YouTube, or Twitter. So in the meantime, I'll explain those numbers to you guys on Instagram or TikTok just over the podcast here. So if you have a family income of $125,000, that's typically what I see is two income earners in that family. They're together making $125,000, right? And when they're making $125,000 together, they are going to be able to qualify for a $450,000 max purchase price in that income category. So that may seem like a decent amount. However, in 2023, when the average home sale price is $668,000, that becomes impossible to find something, especially if you're living in BC or Ontario, because those prices have just gone crazy. And with the crazy prices and the crazy interest rates and the crazy market that we are in, the demand is very much there. We're seeing a lot of hardship for these buyers because they're doing everything right. They have two very good full-time jobs, together earning them $125,000. They have no debts, so they have no credit card debt, no car loans, nothing like that. And they can only qualify for a maximum amount of $450,000. I mean, I really can't believe how little it is that that income can get you in today's Canadian home buying market, especially for someone who's financially savvy and is not taking on any debt whatsoever. Because someone like that, I think, deserves to be able to get a home, right? Or a couple like that deserves to get a home. If you're just joining me, thank you for the follow. Looking to get more information, make sure you follow my channel and like my content to see more of that. So if you have two incomes and you're just joining me now, we're just talking about the power of adding a cosigner. So if you have two incomes and you're making $125,000 together on those two incomes, know that you're only going to be able to qualify for a max purchase price of $450,000 in today's Canadian home buying market. Not very much at all. So what I always suggest is adding one cosigner, and then adding a cosigner that even earns $50,000 will increase your home buying budget considerably. Like absolutely considerably, because it's a huge difference going from $125,000 to $175,000 of annual income on your mortgage application. So much so that the banks will take you from a max purchase price of $450,000 to $700,000. And a lot of the reason why this is these days is because there's so many fixed expenses with regards to owning a home that is also taken into account when we look at what people qualify for. So there's the heating expenses that are taken into account for a mortgage application, and heating seems to be going up all the time every year. And we also take into account property taxes on a mortgage application. And those seem to be going crazy every year, right? Every year, property taxes are increasing, and that is taken into account on your mortgage application. So when we look at those two combined, you need almost a whole separate income to qualify for all the fixed expenses that amount to in a mortgage application for property taxes and utilities. So when you look at adding the mortgage to that, now you have that high interest cost, which you almost need that second income to pay for that high interest mortgage cost. And then you need that third income to actually pay down some principal. Figuratively speaking, that's how the bank is thinking, right? So when we look at qualifying people, adding a third income to your mortgage application is going to do a huge benefit for your qualifying. And yes, you're right. If you're just joining me here on TikTok and Instagram, you can send me some questions. But home insurance, someone's pointing out home insurance is something we need to take into account. And for anyone that's buying a home, when you're qualifying for a mortgage, yes, home insurance is something that you should really budget into every month and your cash flow, and see if that's something that you're going to be able to afford. And I'll get into a story actually about someone I met yesterday about a home buyer who thinks buying may not be the right answer. But home insurance, actually, the lender doesn't take that into account in qualifying you for your home. They only take into account that heating cost, the property taxes, and the principal interest from the mortgage. I mean, home insurance, of course, is a very real expense, but it's not an actual rule as to they use it to qualify people for a mortgage. But maybe it should be, right? Maybe because some homes have electrical or plumbing issues that could cost for a higher policy cost. And with that, should someone need to qualify for that? Right now in Canada, we don't have those discriminations against plumbing or insurance or anything like that. It's kind of taken into account standard on the back end. If you're just joining me right now, we're talking about the power of co-signing. And we were just talking about how, first of all, on Facebook, YouTube, and Twitter and LinkedIn, I have the data and the numbers posted, but on TikTok and Instagram, I'm just talking them through. Make sure you follow me for content like this every week. So, a family income of $125,000 is going to get you a max purchase price in Canada of $450,000. And if you add an income of $50,000 to your application, so that could be a co-signer such as an uncle or a sister or a dad or mom, or perhaps your grandmother's earning a pension. Um, that can actually add a huge boost to your financial capabilities on your mortgage application and take you from a max purchase price of $450,000 in the best case scenario to a max purchase price of $700,000, which is way higher than $450,000. So if you are able to add a cosigner for $50,000, it actually increases your max purchase price by a huge amount, $450,000 to $700,000. I mean, that takes you from not being able to find anything right now to being able to actually be in the market. Of course, you need your down payment, but it actually allows you to be in the market. And by being in the market, allows you to get into that house right now, and start paying down a mortgage. And the ideal situation would be that when your mortgage comes up for a renewal, we can actually look at uh, removing the cosigner from that mortgage application and just leave the home that you've purchased in only your name or you and your partner's name, and remove that cosigner altogether. Pretty amazing things that you can do when you do it that way. I've seen other buyers do it that way, where they buy a home with a cosigner and then just remove the cosigner at renewal. Very easy process. Co-signing also doesn't cost your co-signer anything. You can actually have it so the co-signer just signs the paperwork. They do need to devote some time, obviously, to providing some paperwork and signing some paperwork. But other than that, it doesn't have to cost them a single cent. On top of that, if your co-signer is worried about any capital gains or tax implications or anything like that, you can actually have your lawyer at the time of closing draft up a letter agreeing for all the tax liability to be on you and not your co-signer for that specific residence. And then that way, any capital gains resulted from, gains if you ever turn it into a rental property down the line, or if you make any income off of it from renting out a room or a unit in that home, all that tax liability is now yours and will never be passed on to your co-signer, because that is a big concern. It's probably the number one question I get whenever I have someone that's asking about co-signing. Is co-signing going to give me a tax burden? Is it going to cost me anything in taxes? And a lot of the times, if the client does feel like it will cost them something in taxes, they won't do it. So that's why this letter that you can do just through your lawyer, or if you want to write your own, you can do that too, just not recommended. I always recommend through a lawyer. That way you understand everything as well. With regards to that, you can just shelter your co-signer from any tax burden that may be encountered in the future. So anyhow, Getting into some other things, if you have two cosigners, that's another thing that can really also boost your mortgage application. Say right now, if you qualify for a $450,000 home with you and your partner, adding two co-signers like a mom and dad that both work can actually almost can pretty much double your mortgage application maximum mortgage purchase price, because you're adding so many incomes to your mortgage application. And then obviously you have a lot of names on your mortgage, but we can look at removing those names down the road, and it becomes very easy to do so. And we typically look at doing that at renewal time. So that's a pretty good option just to be able to get into a home today and start doing that. If you have any questions, make sure you pop them into the chat here. I'm just going to take a look here. Okay. I don't know about that or what that is. Okay. Just looking on TikTok here. Thanks for all the likes, guys, and the follows. If you're just joining me here today, we're talking about the power of co-signing. And if you want to follow my account, I do a live every week, and I release a new video daily on my TikTok account. And with that, just looking here on Instagram, what we got there. Okay, so yes, co-signers are definitely the way to be able to get into the home you want, the home you actually desire to be your first home, instead of being very discouraged. Now, what happens if you don't have family that can help you with co-signing? What happens if your mom or your dad is just not around, or the folks that are around just they don't have good credit, they don't have good income, whatever it may be? What happens if we don't have a cosigner? Well, I'm going to get into that next year. So if you don't have a cosigner, another thing you can do actually is talk to a friend or connect with a colleague. And what you guys can do is you can structure this in a few different ways. One of the ways that I see people structure a cosigner when they're talking or working with a friend or a colleague is they'll actually have that friend or colleague buy the house with them and actually move in with them and share the living space. So these folks are going to look for a little bit of a bigger home, a home that can have a second cooking area added pretty reasonably easy, or already has a second cooking area, and those two families units will share that home. And what I've seen sometimes is a boyfriend girlfriend connect with a friend, and the three of them live together, right? And what they do then is they appropriately put in the amount down payment. So each put in a third, and they agree that they're each responsible for a third. So the couple themselves 2/3 total, and the individual person 1/3. And then the three of them usually have a good annual income close to $200,000 and can afford pretty much any reasonably sized home in today's market. So that is actually one of the other ways you can get into the market today with a cosigner if you don't have any family, right? And if you can't hook up with a friend or a colleague to be able to do that, then another way you can do that is you can get an investor. An investor actually cosigns in exchange for equity. So what an investor will do, and if you're looking for something like this, you can always connect with me, and I can probably help you get connected to someone like that and get you pointed in the right direction. But another thing investors do is they'll co-sign in return for equity. So if you're looking to buy your first home and you don't want anyone living with you, but you need a co-signer, but you don't have a co-signer, you don't have a friend, you don't have a colleague, and you don't have a family member that can co-sign, Another thing you can do is offer equity position in your home in exchange for the benefits of co-signing. Now, you might think that's a really stupid idea. Why would I give up some of my equity in the home just for the ability for someone to co-sign? And well, you might be right. It might be stupid, especially in today's market. But by offering an equity position to an investor for the benefit of them co-signing for you, can take you from that $450,000 max purchase price into that purchase price that you want to be in, whether it is 700, 800, 900,000. You can actually get into that home today, and when you're into that home, you may give up a percent equity of that home to the investor, but they are actually taking on the risk. So if you stop paying your mortgage, they're responsible for that mortgage payment. If you stop paying their mortgage, then their credit gets hit. So they are taking on a lot of risk by having you take on that larger mortgage payment. In return, they are being offered an equity position. And then those folks essentially, again, same idea. They own the home, and then at renewal time, they will get into that new mortgage without the cosigner and have the cosigner removed. And because they have given up that percentage in equity, essentially what they do at that point in time is they pay out the investor that percentage of equity that they have given up for the ability for them to actually get into that home. And usually by that point, they've built up more than the required equity to pay off the investor. So that's another way people use co-signing to be able to get into that home that they want today. So as we are talking about this, let me know in the comments what you guys think. What I wanted to do before we end today's program, this is episode, what is it? Episode, say 157. We wanted just to cover off some mortgage updates here in today's market. And that is that fixed rates haven't been really moving since the Bank of Canada rate announcement on September 6th. What I've noticed actually is before the rate announcement, I did see fixed rates moving up and down, and they were actually going up for the most part in terms of trending upwards. But since the rate announcement, the trend has locked, and we're seeing a stagnant 4% on the 5-year Canadian bond yield. And it's now been sitting at 4% probably since the beginning of September, hasn't really moved off that mark. And because of that, fixed rates haven't really moved from their mark either since the beginning of September now. The interbank rate actually has gone down 0.2% since I last reported it at being at 5.5%. That really doesn't mean too much. The slight decrease in the interbank rate does indicate some sentiment change in how things are going, but very slight. We'll have to see if it turns into anything down the line. We're looking at average national sold price for homes in Canada next, and that's currently at $668,000 right now. And with that, that is a negative change of 6%, actually. Wow. So home prices down 6% from the month prior. Massive change. However, at the end of the summer, usually we do see a little bit of a dip in the average national sale price. It's expected. It's something that probably will happen for August as well. But as things pick up for the fall, I usually see another uptick in the average national sale price. Now, a lot of people have been saying that, this last uptick that we saw was the last increase in house prices, and we're in a downtrend now. So we'll see what the September numbers show, and we will get those numbers in the middle of October. In the meantime, we should anticipate getting August's numbers in the next few days, so I'll have that for us on the next episode. Inflation rate. Where's Canada's inflation rate sitting at? Well, we're getting the new update on Canada's August inflation. That will be released in 5 more days. But in terms of July inflation, we are seeing that sitting at 3.3% for July. And that is up from 2.8% in June of 2023. So with the change of that, it really takes into account mortgage interest costs, which have been going up. But because of that, is it accurate? I'm not sure. We'll have to see how inflation fares out next month. We're getting those new numbers just in a few more days, 5 more days. We'll have August inflation numbers out. What do you guys think happened to American inflation, though, for August? We have those numbers, and let me go over them with you here. So May, we had 4.1%. June, we had 3%, so decrease. July, we had 3.2%, a little bit of an increase. What happened in August? Wow, a massive increase to 3.7%. Wow. So American inflation actually way up for last month. So we'll have to see what the Fed does. The next Fed announcement. Next Fed announcement is, when's it happening here? September 19th, I believe it is. When's it? September 19th. With a policy statement on September the 20th. So we'll have to see what happens then around that time, and they might actually increase rates again. With that, inflation numbers. Last time they met was July 26th. They raised interest rates by 0.25%. Now, the Bank of Canada met September the 6th. They decided to keep rates where they're at, did not decide to raise interest rates, even though I had predicted, and also interest rate, my guinea pig, also predicted that rates would go up by 0.25%. Now, because rates did not go up, there's a way bigger chance now that rates could go up on the next Bank of Canada meeting. That is happening on October 26th. Let's see here. It will be at 10 a.m. October 25th, actually, 10 a.m. And I'll be holding a live rate announcement on my channel right here. So don't forget to follow and like this video to be notified of that rate announcement when it goes live. And I'll be sharing those results with you here all on October 25th, 2023. Now, we do have a good chance of rates going up at that point. We'll have to see. In the meantime, I think with rates not going up, it is going to fuel the housing market probably this next month or so as people try to lock in these rates before they possibly go up at the end of October. And we'll have to see. GDP numbers are down, but inflation is up. So we're going to have the new inflation numbers by that next meeting, and they will use that to take into account how they will proceed with the rate announcement. All right. So again, if you have any questions, let me know in the comments. I've been doing this now for 13 years. Home financing, rentals, anything you need. This is Canadian Mortgage Weekly, Canada's only weekly video mortgage news podcast, episode 157, how the power of co-signing can really help add strength to your mortgage application. We looked at today, actually, how if you have you and your partner together making $125,000, the two of you combined can afford a home of $450,000. Now, in today's market, not really going to be able to buy you anything at all. So by adding a cosigner, for example, a cosigner of $50,000 can increase your maximum purchase price from that $450,000 to the $700,000, allowing you to really get into that home that you want today, or actually can get into in the first place, rather than just being stuck not finding anything on the market for sale, because it's really difficult to find anything right now. Less than 500,000. It's just really difficult. And the only living spaces that I have found in our area, which is Barrie, Aurelia, Simcoe County, under 500,000 have been either condominium units with a condominium fee that is also needed to be paid in addition to the mortgage, property taxes, and utilities, but also homes that are in need of extreme repair. Now, if you're looking for a home like that and you want to get a deal and you want to see if there's any way we can also add mortgage money to that home mortgage for you be able to use that money for improvements, give me a call about that. That's a separate program. Possibly I'll talk about that on a separate episode. But thanks for watching today, everyone. This has been another episode of Canadian Mortgage Weekly. And for September 14th, 2023, my name is Joe Bladdock, 13 years home financing experience, and we'll see you next time. And don't forget to follow and like to make sure that you are kept in touch with all the news and everything that comes out every week